The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
All right, looking good, Billy Ray. Not feeling so good, Billy Ray. We have a little bit of a cold today, Lewis, so we're going to take it easy, breezy. We're going to take a look at the first chart of the day, which is the natural gas going back a very, very long time. But I'd like for you to look at the time where the 61% retracement came in early last year. At that time, our good friend, Mr. Z, in the room issued a major buy signal down there at around 2.55, as I recalled. He followed it through the whole year, and he gave a special alert when it broke out to the upside above that $3 level. And as you can see, the high went all the way up to $4.94, and it stayed there for 3 weeks. And at that time, it was making some very nice topping type patterns that looked like the market was going to correct, and then it certainly did. But let's take a look at natural gas as it looks today. Here's where we were last week. We were watching this very closely because we were pointing out the head and shoulders pattern that we had up there. Hold on one second here. A margarita elixir. I think you're absolutely right, Marshall. It certainly is. And my cousin, who lives in Tucson, has lived there for a while. She's been in the hospital, well, in nursing home for a long time. She passed away 2 days ago at the age of 85. She had Alzheimer's for several years. And boy, you talk about it being in the family. Her father passed away of that. Her mother passed away of that. And it's been a pretty tough for her part of the family. Anyway, fortunately, that's not the bloodline. That was their cousins through marriage and stuff. Anyway, if you look at this NASDAQ, oh dear, amazing what cold medicine will do for you. The key here was if you look at the 27th, we had that 61% retracement up there at 369. Folks, that's a $7,000 move all the way to the bottom down here early this morning when we gapped down. So you can see how big of moves you have with natural gas compared that you have with anything else. I've dubbed this the pork bellies of the energy complex because it moves around a lot. The fills are good, and the stop placements are very good. You get slippage once in a while, but it's really not by very much considering the size of the moves that you have here. That's really quite amazing. But look what's happened this morning. After we gapped down here, this was real early this morning, around 6 o'clock. The low was made late, excuse me, late Sunday night, and that was down around that 306 level. Then we had, let's get this up here so you folks can see it, and we'll take a look. There you go. All right, and then we'll be looking at, you'll notice that we had the low on Sunday night, and then we rallied all through the night until early this morning, and then it pulls back right to a 78% level, and it's already gone up to that 315 level. So watch for a pullback in this. This might be a pretty good bottom, and you know there's not many gaps in the natural gas, so pay attention. But let's have one other good lesson out of this that we've got to remember. Let's get this long-term weekly chart up here again, because this is something Thomas White of San Francisco. Ruby, no, I have not. I knew a bunch of brokers years ago, but you know, you're going back 40, 50 years, and a lot of those guys have gone up to La La Land. So I really don't know him anymore. But I never did. So anyway, but notice here that we had that down sloping line from the 2017 We broke through that at the 61% level. That was at 345. That was saying it was going to go down. And we stopped right at the 786 last night down there at that 306 level. That was the spot on number, 306. So this could be a pretty substantial bottom in the natural gas. So pay you know, give it your 2 cents worth. Keep an eye on it. It's worth something to you know, to take a gander at anyway. If you folks have any questions today, today's the last day of the year that I'm going to answer any questions. So if you've got any charts that you want to see or any questions, you know, let me know. I'm going to go talk a little bit about seasonality here for a second, and we're going to do that. I hope if I can find it, and I think I can find it. Here we go. Let's take a look here. This is the long. Let's get this up here. This is the long-term weekly chart on gold, and I want you to go back and just check to see, going back, this is going back 5 years, folks, 6 years. Let me see, 1, 2, 3, 4, 5. Let's try 5 years. December, no, it's 6 because that was December of 2013. And then we had another low we had a high in December. Another low in December of 2014, another low in December of 2015, another low in 2016, another low in 2017, and here we are, December, and we are inverting. We are making a high at that point. Now, I'm not sure the actual meaning of that, but when you see that cadence that's there, it's low, 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 high. So, and we're setting right at the 61% retracement that comes in around 1289. And the high so far today has been 1286.5. We're trading at 1281 and change. This could be very, very important as we look at gold in the coming weeks and months, because this is a beautiful Gartley pattern. And it's still bullish because we've had higher bottoms through here. The bottom that we had in August at that 1270 level, we tested it at the 61% retracement at 1193, and now we've completed that ABCD pattern at that point. Now we have a special request from Ruby about the wheat, and we want to get this up. First, Ruby, I want to share with you the Minneapolis wheat, because Cy Monley is quite friendly to the silver. If you'll see here, hold on here 1 second. Okay. We down in this area, 545 is where they started buying wheat for Sylvius Financial. So I think that's something to keep in mind. But if you look at the wheat here on the March wheat, we're at major support here. We're trading at 508 today. And I mentioned today that we do have some strong seasonals that occur during the early part of the year. In other words, January, February, March are usually good rally areas. But you can see here we're setting below. We're trading at 508 now, so we're down to those lows we were last Thursday, and we've taken out the 78% level. So I would prefer to wait on this to make sure it gives us some idea of an area where it wants to hold on. I mean, I don't see any reason to be instrumental in buying any wheat right now. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, we're back, folks, and we're going to post a chart here for Ruby to take a look at the corn because it has a lot of support there at 375. I believe that's where we're trading right about now. So you wouldn't have to risk more than a nickel right there in the corn, and you have that head and shoulders pattern move, and then you have the move down to it. So that's an interesting one to take a quick look at. So I think that's very important. We mentioned the fact that that the gold had made within $1.50 of that 61% retracement on the long-term weekly chart. If we take a quick look at what we're looking at silver here over the last several months, and that's had a heck of a move, folks. We've had almost a $2 move in the silver, and we got up to that 1.618 expansion there, which is right at the 1545 level. So we want to be watching these on a pullback, especially when we get to see that if it moves back down a little bit with an ABCD, that would be a good place, to be a buyer of that. I noticed that some of the folks in the room have bought some of the silver rounds. I don't know what they were selling for. What were the silver rounds selling for that you bought at the Silver Queen? I'd like to know that price because well, you don't want to hope that silver gets back to 1370 again because that would really be too much. You'd like to see it get down to maybe 1460 or about $1 lower. That would be all I would be expecting here because we've got a chance here for a really big breakout in gold and silver. Anything above 1290 in the gold, 1292 would be a really powerful move, I believe, in the gold, and silver's had a heck of a move. Remember, silver was lagging badly, folks. It was really quite a bit. Now, at this price, let's just take a quick look at the long-term chart here of silver. Hopefully, we'll find it quickly. Right off the top. Can you believe that? Just a second here. We'll get it up here and take a look at it. You'll see here, we'll get this up here, and you'll be able to see it. 5 coins for $90. Boy, that's under $20 a piece, so that's what, 18. Yeah, you're paying $18 a piece. That's not bad. I mean, I think that's a fair price. That's a little too high of a premium, but those coins are beautiful, and I think it's a fair price for it. You don't get much of a discount because they're semi-numismatic coins. But here's the long-term monthly chart of the silver, folks. Remember, we have posted that long-term silver chart with those breakout levels, and we need it to get above 1620, I believe, is the breakout level in the long-term monthly chart. So we want to be watching for a buy here in silver and also in the gold market, because we should be getting ready for something really big. Now, December, as we said earlier, is the month of major trend changes in the gold, and here we are making a high at the end of December. So this is something that we need to really watch closely. The one thing, if you're really bullish the complex, and that is if you see a really big drop like $40 or $50 in one day, that would not be a good thing to see. That's just something that you don't want. Now let's take a look here at the XAU, which is the gold and silver miners. And you'll notice here that there's been a really big divergence here between the spot gold and the spot silver against the gold and silver. Part of that is the fact that they're silver stocks and gold stocks, and they get hit with the rest of the market because people, when they run for cover, they run for cover everywhere. But if you'll notice really closely here, in the gold and silver index, you'll notice the beautiful ABCD pattern that we have forming between September, where we rallied up into October. We came down into November the 15th, and then we rallied up, and that was a perfect ABCD, folks, right at the exact high at 72. From there, we dropped down to 66.5. We rallied back to 71. We're trading at 69.68 as we come in this morning. So it's lagged quite a bit over these last 10 days of trading. That could be something of a great deal of significance, especially when we're looking at the area of the 61% on the weekly in the gold market, because that is a perfect ABCD pattern up here in that anywhere near that 1288, 1289, 1290 level. So it's something that we really need to pay a little bit of attention to. Regarding the stock market, folks, let's just do the S&P here, and then we'll move on some of the others. This is it over the last few months here, and we had that big bottom. We know that the bottom on the 26th of December was right at the, actually came in on Christmas Day because they were trading Christmas night, was right at the 61% retracement on the weekly chart of the New York Stock Exchange Index, which is the broadest index of all. This is how they measure the mutual funds and stuff to get your values of your 401ks and things. Not related to ETFs, of course, but that's the major market. It's 2,300 the biggest stocks, the highest capitalization stocks, the best volume stocks in the United States, and there are also the major foreign stocks are in there. But you'll notice that we had the rally here. We've had an equal rally that we had from November 21st into December 1st. The rally that we had these last 3 days was exactly 382. I marked it there. Now, we did the same thing in the Dow Jones. We did the same thing in the NASDAQ. They all rallied to the 382 level. But the key here, and this is what I tried to bring to your attention, is the fact that when these happened these last 3 days, open interest dropped. And when open interest goes down and prices go up, that is short covering. So we are due for a correction. This correction will be a very, very important one, because if we go back down and test the bottom, that's going to be the most incredible, what do you call, a test that we're going to have for quite some time, in my opinion. So watch that very, very closely. Like last night, we rallied up to exactly the 78% level of the previous day's range, up there at 25.12. We're now trading at 25.04, so that's lined up pretty much what it should have done. And if it's bullish, it's not going to get below 24.85. We get below 24.85, I would think that would be a sign that, you know, maybe it's not nearly as bullish as you might want to think. So these are just some of the things that we're watching here today. We have a break coming up, and when we get back, we're going to be talking about the sugar market and where we are with sugar, because it looks really interesting here. We're going to find out. And
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN has launched our best sale of the year. The Tiger Dollar End of Year Sale runs through December 31st only. And right now you can get up to a 40% bonus on whatever you spend on Tiger Dollars. We've doubled the normal bonuses that come with Tiger Dollar purchases. And the best part is, whether you're a new subscriber or you're already subscribed to any TFNN product or service, Tiger Dollars never expire and can be used for any TFNN newsletter or service. We've redesigned the new TFNN website to make using Tiger Dollars as easy as possible. Once you apply them to your account, they'll be used for all recurring transactions going forward automatically, so you have nothing to worry about. For you current subscribers out there, this is a no-brainer. Go get your Tiger Dollars now and lock in added savings on all your subscriptions. Remember, this sale ends December 31st, so get your Tiger Dollars right now before this deal passes you by. And Happy New Year from all of us at TFNN. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I posted the daily chart for March sugar. That's the one that is that's currently the leading open interest one that we're looking at. We're very, very close to the 61% retracement that comes in at 22.14. That's down about 25 pips. I don't know where it's trading this morning. but it should have some pretty good support there. The thing is, if you're going to buy it, you're going to have to risk below the 1155 level. So you're going to have to risk about $600 on that contract. It moves pretty good. Each tick is worth the $11.25 per pip. So it's very interesting. I have a great story about sugar. This was 1968. It was a 68 or 69. It could even be, no, it might have been 1970. Anyway, we were at the Conti Commodity Office in West LA, right across from UCLA and the Howard Hughes building and all that stuff. Anyway, the sugar was trading at 66 and change, and that was up from about $4. So it's trading at 66 cents a pound. It's wilder than a March hare. The increase on margins was out the window. You had to have like 300% increase in margins and everything, but it was really crazy, moving $1,000 a day, which at that time was a dollar a pound. And Roy Fassel, who was the manager of the office, who was an excellent technician, still trading to this day in his mid-80s over there in West LA. Anyway, it's around 66.40, I believe, was the number, and he sells it at 66.40. And it stays there for about an hour, and it backs off, and everybody's watching it because they heard Roy put the order in. He sold like 6 contracts, which at that time was a lot of money, because the margin on it was I think it was maybe $5,000, which was quite a bit for sugar at that time. Anyway, it backed off to about 66.10, and at that point, he had made $300 times 6, so he had made $1,800, and he decided to take his profit on it. And no sooner did he take his profit, and I'm saying no sooner, when he put the order in, they must have been waiting. No, there's no nay, but what happened was the silver, the sugar dropped $1. I mean, it went from 16.10 or 66.10 to 65.10, like there were no prices ever traded, and it was just straight down. Stopped there for just a moment, and went all the way down over the next year or so, back to $5. And Roy never traded sugar again, because he was so angry with himself for taking that $1,800 profit in a trade that would have paid. I'm sure he would have made at least 10 cents in it, which would have been 60,000. Anyway, that's mainly what we're looking at. Mr. Z is posting here on New Year's Eve that silver has surpassed his key point of 1510. I certainly agree with that, and he's still long. God bless him. He's been long this stuff for quite a while. He pointed out the fact that when we hit that 1385 level, that was a 1.618 expansion on the daily chart, and it was also the 78% retracement on the long-term monthly chart. And we've had this big move here. So the thing to watch now in the gold and silver, especially during the seasonal time, is to watch for this ABCD pattern that is going to be coming up very, very quickly. So that's it'll occur. We've had a straight up move here during October, November, December. So we'll get a correction. The question is whether it'll be in my lifetime or yours. So we'll have to do one thing at a time as we wait and see if it's going to do this. Now let's switch over here to the one other thing I wanted to do is I wanted to let you see the long-term picture in the sugar market also, because I think that's relatively important, and hopefully we'll get it up really quickly. That is going to be unavailable right now, folks. Can't do it, but we'll take a look at something else here. We've covered the natural gas. I want to give a quick thing here on Bitcoin. We believe we've made a bottom down here at this 38. I'm going to look at oil. I certainly will, Tucker. Just give me a second. I'm not sure the best index for watching silver. I believe it's SLV. That is the ETF for silver. Mr. Z's in the room, so he will correct me on that. But I think SLV would probably be the best index for that, because a GLD is a really good one for gold. So I believe SLV would be the good one for silver to look at. So SLV does work. Terry's saying that it works. I know that it works. So That's what it looks like, what it could be here. So let's pay attention to that SLV. Maybe it will give us an indication. There is a question about that XAU that I posted. The XAU is the gold-silver index. Those are the silver stocks. They act differently than the metal, but sometimes they give us a pretty good idea. Right now there's a divergence, but that divergence can disappear in a heartbeat, as we know, on some of these other things that we're looking at. But let's take a quick look here at the Bitcoin, because we're down here at the level of the 3,800 that we thought was going to be the bottom. We're trading it right around 3,900 now. Those are the major ABCD patterns that we've had in the Bitcoin over the past 10 years. And this is all about, it's not so much cryptocurrencies as it is the, hold on one second, is the cryptocurrencies as it is with the blockchain technology. So that's another thing that we might, want to pay attention to as we look at this, because blockchain technology seems to be the internet squared. At least that's what they're telling us, and we'll find out if that is going, if that's going to be the case. So let's, sort of watch that. Let's take a quick review here of the market early this morning. We're still up in stocks. We came back. We've rallied up almost to the 78% level of the intraday range. That would take us in around 25.10. Gold is trading at 12.81, still down from the high. Natural gas is backed off to 13.10. It should be a buy at 13.09, and you wouldn't have to risk more than $300 in that. And believe me, that is one wild puppy. So if you're going to trade natural gas and you don't use a stop, you have no one to blame but yourself, because that is one strong puppy. That's all I can say, and that's the end of the story. And regarding the S&P, I believe we're going to have some resistance between 25.15 and some support probably coming around 24.75, which was those lows from Friday. That's what I think it is, last day of the year. It's a full trading day, but it will be light. Believe me, there are very, very few people. All of my friends on Wall Street, there's not one of them that is there. And so they do take a big break here today. Now, let's get a quick break. Oh, we got a break coming up here. When we get back, we're going to take a look at the currencies, because there's another one that has a real interesting pattern of changing around the first of the year. I don't know if it's corporate planning or what it is, but we'll take a look at that. And we'll start, of course, with our good friend over across the pond, Theresa May, and the British pound. We want to look at that one very, very closely, because you'll see it in just a moment. 877-927-6648.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. 9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're going to take a look here at this British pound. We went down and made the 78% level when it was trading at 24.76. That's when Theresa May was supposed to be heading towards the back shed, the woodshed, but turned around and she's still in office. And we've had a 300 pip rally in this. We're up almost 100 pips today. We are up 100 pips today. So it's turning, which is a very interesting sign here. So we have to pay close attention to that. Okay, all right. There, the other one that looks like it doesn't have any help at all is this Australian dollar. We're down, breaking through some pretty serious support last week, and it's not the British pound. Let's try the Australian dollar here, and it looks like we're heading down to that 69.20. But we have another one that looks really interesting, and we've been talking about this for quite some time. We're right up in this zone again. We've been up here for several days. We're back here again at the same price, but it's the Canadian dollar versus the U.S. dollar. That comes in around that, right around that 136.80, 136.90 level. We're trading 136.50 now, so we could certainly get to that level, and that would be one that really pay very, very close attention to. Now, we've had a request from one of our listeners here, and that is to look at the crude oil complex, and we will certainly do that. We're going to look at it on a longer-term basis because we've had some really big moves here in the last 6 or 8 weeks, and it's very important. A book or website for learning Forex, you know, if you would just go online somewhere, but you got to be careful. The question is, can anyone recommend a book or website on learning Forex? And there's a whole bunch of them. The problem, some of them are really, really hard sells, and they give you a lot of stuff that is really not, well, it borders on fake news, so be very, very careful. Forex.com, I believe, was one that was pretty good at one time. What was the other one? It was what was it? Gain Capital used to have a really good one, and of course, oh my gosh, I can't think of it off my top of my head, but there's just a lot of information. For first thing, if you're going to do anything there, for God's sakes, don't pay for anything, because there's so much free set stuff out there on Forex, and I don't know what you're looking to learn. You just want to learn the pips and yeah, trade what you see certainly works on Forex. The patterns are absolutely great on foreign exchange. But if you're interested in the pips and the hours of trading and all that stuff, just be really careful what's out there, because there's a whole lot of things that are tough. The things that are free are probably worthwhile. Oh, you know what? Try to go to the CME.com. They might give you a pretty good idea. of foreign exchange. But there are so many small foreign exchange banks out there. The people that are using foreign exchange for trading, it's really great. But some of them are not as reputable as others, so you have to be really careful. If you have any questions, drop me an email, larrypesavento@gmail.com, and I'll try to take a quick look at it and see whether I think it's okay or not. But if they're starting to ask for, something like $10,000, $5,000, something like that, don't walk away from that. You got to run away, but you have to pay close attention to it. But there's not much to learn about Forex, folks. You got to know what the cross rate is and what the values of those currencies are, what the trading hours are. I've posted the trading hours here many times, and then you got to know what the pip value is. And the pip value, you can set that yourself. So you can trade for $1 a pip or $10 a pip or whatever value you want. They'll give you the leverage that you're looking for. The problem that you have is you've got to be with a reputable firm that will be able to back you up. If you remember FXCM, which was a really good one, and I still think they're in business. That's a good one. You might check that one out, FXCM. But they got hurt so bad during that debacle that the Swiss franc pulled about 4 years ago. It's really, they really did a disaster. That was the biggest bank robbery ever done, and nobody even reported it to the police. No one ever goes to jail for white-collar crimes in this business. Now, what Madoff did was not white-collar. That was strictly that was a Ponzi scheme. But when they look at J.P. Morgan, folks, they get fined billions of dollars for doing bad things, and not one person goes to jail. There's something wrong with that. I mean, if you're going to say, well, the reason why they don't change it, because that billions of dollars goes into the SEC and the CFTC. They get to use it, for their, own purposes. It doesn't go into the U.S. Treasury. At least that was my understanding. So anyway, let's keep an eye on some of these things. Now, we want to look at the crude oil. I posted it here, long-term chart here. You can see we've tested the 61% retracement. We had that big 5% drop when the market collapsed down on the Christmas Eve. The crude oil was down 5 cents, 5%. It immediately has regained that 5%, and it's holding it on. And it needs to get above $47 a barrel again and close there in order to see if it's going to move any higher or not. So pay a little bit of attention to that as you're watching these things. Now we want to take a look here. I guess we should take a look at the heating oil, because that's another one that is setting right at the 50% level of the whole move. Going back to 2016, you can see the cycles that is there. That's just a nominal. That's a 76-week cycle. We're over that right now, right at that 50% level. And it's near the 61% retracement of the low from July of 2016. So this area of 166 should be pretty good support in the heating oil. I haven't checked to see what it's doing this morning yet, but you see we got crude oil is trading at 45.60. It's up a little bit. We've been $1 higher, so that hasn't really changed very much. Now we're getting very interesting now. We're getting the natural gas down to that 308 level, which is the 61% retracement of that whole move that we had this morning. So if you're trading natural gas, watch that one very closely. The gold we got at 1282. That's only down $5 from the high. No big deal there. And the Canadian dollar is trading at 136.40. The high overnight was 136.48, and the high on Friday was at 136.60. That's that same number that we're watching several times. We could easily touch that one more time. And we've got the pound up a little more than a point at 127.80, so that's another one. Now the bonds are down just a very, very small amount. They've held up relatively well, but longer term, the bonds look like they want to go a lot lower, but they may not. Who knows? We got a break coming up here. Any other last? I want to wish everybody a happy New Year. And that's for sure. I'll finish up the show here in 2 more minutes, and then I am going to take it easy and be breezy. But very happy holidays to everyone, and we really appreciate your support here at TFNN.
The secret to being successful from a trading perspective is to have an untiring, unquenchable thirst for information and knowledge. There are certain situations where you can absolutely understand what the next move of buyers and sellers is likely to be, or what I like to call a competitive edge. Hi, I'm Steve Rhodes, the #1 market timer for the S&P 500 and bonds as ranked by Timer Digest. And on Tuesday, January 8th, I'm going to teach subscribers of Mastering Probability how to use Tom DeMark's setup 9-count and trend lines. If you're looking for a competitive edge, then now is the time to sign up for my daily newsletter service, which will provide you with immediate access to this live workshop as well as other extraordinary archived workshops. And don't worry if you can't attend live, because this workshop will be available on your members page for the next 30 days. Mastering Probability comes with a risk-free 30-day unconditional money-back guarantee, and therefore you have nothing to lose and everything to gain. Sign up today at TFNN.com.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted the chart of the IWM, the Russell 2000. I'd like for you to pay attention to the, well, you don't have to pay attention. It's up to you. But it did make a 61% retracement, spot on the weekly chart. And it has had a pretty good rally. Well, like I mentioned, we've had a drop in open interest these last 3 days in the stock indices, every single one of them. That is a definition of a short-term rally. We're going to have a test here probably this week, but we will be closed tomorrow for the holiday. I believe they'll start trading in the middle of the night like they usually do for New Year's Day, but we'll have to wait and see. So we have trading for Wednesday, Thursday, Friday, and of course I believe on Friday we're going to have our special guest, Mr. Norman Calls It to the Minute. Winsky will be our guest because he's got some very interesting things to share with from an astrological basis. So with that open interest going up, going down, and markets rallying, with prices rallying, that's not a very positive sign. But we will keep watching that closely because this is a holiday today, folks. There's not going to be a lot of volume. There'll be some, but not a great deal. That's for sure. That's the main thing of keeping in mind as we look at some of these things as we go through here. Okay, now one other. I think that's about it. Oh, I want to share with you your parting gift here at TFNN today, and I will show you. This is the old clan as we're sitting here waiting to move to our next destination. And I want to wish all of you guys a Merry Christmas and well, Christmas is over, but a Happy New Year. And you know, it's been a really great year again. I can't believe I've been doing this. I think this is 11 or 12 years now I've been doing it. I enjoy it a lot. Meet some wonderful people through here. So have a wonderful time. Live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!